Wes, good to see you. We are diving into the headlines today. Rising interest rates mean good news for annuity buyers. The third quarter of 2023 saw record growth in annuity sales. According to LIMRA, which tracks the numbers, total annuity sales reached $89.4 billion. That's an 11% jump over the same quarter last year. One of the reasons why, of course, the percentage of workers in the private sector with a pension, now 4%. That's down from 60% in the early 80s. Annuities can provide that guaranteed income. So explain why annuities could be helpful as part of a larger financial plan.
Sure. So we've saved our entire lives, right? Heading into retirement. You've generated this big bucket, hopefully. And now it's about, okay, how am I going to turn this into cash flow? So we've all heard of pensions, and those have kind of gone the way of the dinosaur. So we can actually use a portion of our retirement savings to help generate lifetime income. And that provides a lot of stability into a plan. So looking at all of your sources of income, this would be another source to provide stable, consistent income. Because Aaron, an annuity is just a tool, but the definition of an annuity is a series of equal payments over time. Quite that simple.
Peace of mind, I get it. So how have recent rate hikes made annuities more attractive?
Well, in various ways, but one is that the crediting can be a little bit more attractive as far as the interest rates, because fixed rates are certainly higher, and the underlying portfolio that insurance companies have, a lot of them are based on a fixed rate portfolio. So they're able to kind of pass on those attractive rates to you as the contract owner.
Okay, so as we talk through interest rates and the different kinds of annuities that exist, do those interest rate hikes affect only fixed annuities?
They don't. They actually affect all of them in mostly a really good way. Kind of a good gauge. So if you think about the one right there in the middle, fixed indexed, so your interest credits are based on the performance of an underlying index. Let's say the S&P 500, usually a piece of what that can gain, and provides protection on the downside. But kind of a good gauge, while not an exact science, but a good gauge of what kind of interest credits could you expect from that experience would be looking at usually the 10-year treasury, and that's around today like 4.2. And we're talking about a 10-year treasury that not too long ago, Aaron, was paying 0.5%.
Right.
So these companies are able to credit more back to the annuity contracts than really in a handful of years in the past. So it can be an attractive time to kind of look at that and kind of lock in those rate opportunities.
Yeah, that's a great example. Puts it in stark perspective. So since we don't know what the Fed will do next, though, regarding interest rates, is now a good time to buy an annuity, or would you recommend annuity laddering?
Well, just like you can ladder CDs, right? Different dates that they actually mature and the surrender period goes away. That can be a smart thing because it spreads out your interest rate risk, if you will. And if you can ladder them, then maybe you have some that mature in 3, 5, 7, 10 years, whatever that may be. But it provides a lot of predictability and as close as we can to a defined outcome when we're looking at planning, which is always, again, that peace of mind can be provided there.
Mhm. No cookie cutter answers, though. So if somebody wants to talk to you to find out if annuities are right for them, what's the best way to reach you?
You can visit us online, patriotwealthnc.com, and go to our Contact Us page, or give us a buzz, 919-322-4113.
All right. Wes, thanks so much for your time today. I appreciate it.
Thanks, Aaron.